What's going on, everybody? John here. I do videos on investing, on generating income online on credit, and then you're going to see some videos recently on adventure travel because I love to use my credit card rewards points and my United points to do exciting adventures out in the outdoors. Everything from snow skiing, snowshoeing, lots of different water sports in Mexico, Virgin Islands, and everywhere else. And then also, I'm starting to do more content on short-term and medium-term furnished rentals on Airbnb, VRBO, and really a lot of other sites too. But I know that stuff like the back of my hand. I've been doing for a super long time. In fact, actually longer than Airbnb has even been a website, believe it or not. So I just kind of take for granted the fact that I know it like the back of my hand. But anyway, I'm going to have some more content on that coming out. What do we have today? Today we have an investing video. I'm going to be talking about Bitcoin and crypto. I have been, just absolutely fascinated with it. I mean, if you're if you're into crypto and Bitcoin, I mean, obviously, that the extremely volatile nature, of Bitcoin and crypto, and it was just absolutely hammered over the last couple of weeks, and then over the weekend, here we are. It's Monday, May 24th, and it was just obliterated over the weekend, and kind of wondering if it was gonna, maybe go away, but it is absolutely on fire today. And if you follow it at all, you know that the market in general is up about 20%. Like we got Ethereum up like 24% here. Take a look at my Coinbase right here. You can see it. And if you are, into it, or if you're not, either way, you can see it. Ethereum up here 24%, Bitcoin up 16%, and then a couple other of all these different coins, Litecoin and Cardano. Cardano's up almost 25%. VeChain up 37, gosh, 40% VeChain. That is just crazy. So very, very volatile in nature. Binance up 40%. So really just crazy. Dogecoin up 22%. That's just a quick glance at at just a dashboard on Coinbase. But basically, the bottom line is, it's pretty clear, pretty much to everyone at this point. I mean, certainly if you're already very, very active in crypto and Bitcoin, the volatile nature of it. It has been pretty impressive in the sense that it didn't go down very much at all. From middle of February to end of March, which is when growth tech, which has been my comfort zone since pretty much June of 2007, when right before the first iPhone came out. Uh, which is growth tech went down, got hit really, really hard, and crypto didn't. Bitcoin crypto did not. Basically, so what seems to be the strategy here that makes the most sense, which really actually makes the most sense in any investment. When you're considering getting excited about it, or really trying a new strategy or philosophy that you want to go after, is really to dollar cost average in and a dollar cost average out. I mean, I think the big deal with stocks is, with stocks, I mean, you have quarterly releases. I mean, you can see their earnings. You can develop strategies for yourself that make sense. Like for me, I look at year-over-year revenue growth. I look at what their gross profit margins are. I try to go after companies that have recently or are about to hit 1 billion in sales. You get to really understand if they're net profit or not, or really how their gross margins look. You can see all that stuff with stocks, and you can't see it with crypto. I mean, there's certain things that you can see, like the amount of new buyers, or just some things that you can see, but you just don't have the same insight that you do with stocks. But in any case, what I mean by that is, if I really believe in a position, like for example, I've got an 80x return on my Netflix shares purchased in 2011, 2012. If you look at their 52-week highs, their most recent 52-week highs, and I wasn't really interested in selling at all. In the first, in the beginning part of that big run where a lot of that growth of the investment was experienced, which is, let's say, 2011 to 2015, right? And I wasn't really interested in selling at all. I mean, as time went on, I got a little bit more interested in selling off chunks because of the reality that it was taking over like a lot of my portfolio. But basically, with respect to Bitcoin and crypto, the most solid strategy, it seems, is to dollar cost average in and then to dollar cost average out of some of your gains because of the extreme volatile nature of it. In fact, there's somebody I kind of found where I think I'm gonna, he's got like a monthly program where you actually got to pay, but he's actually pretty solid. I'll do some more videos on it later on if I actually do get into the program and do some of those trades. It looks pretty exciting, but if I were to, let's say expose myself to anywhere from, 3 to 5% of my, assets in brokerage firms to some of the Bitcoin and crypto, which I am interested in doing, I would certainly dollar cost average in, and then also certainly dollar cost average with some of my gains, and really just develop a strategy for myself that would work. But I want to kind of share a clip with you today. I mean, one thing that I do is I'm pretty active in seeing what Tom Lee has to say. He's somebody that has been pretty fascinating to when he makes assumptions on the market, and he also has a lot of assumptions on Bitcoin and crypto. So I want to take you in and show you a little clip with what Tom Lee says about Bitcoin and crypto, and it's for those of you that are super bullish on Bitcoin and crypto, I think you're going to love it. So it's pretty good. So let's go check it out, okay?
Maybe I should call you Laser Eyes, Tom Lee. You still got those in your Twitter profile. So tell us, has your long-term thesis on cryptocurrencies, has that changed over the last few weeks? Where are you?
It hasn't. I mean, Bitcoin volatility is sort of systematic to the network itself. So I think anybody who buys Bitcoin has to be aware it's always going to be hyper volatile. That's the opportunity, and that's why people call it diamond hands. I think the real to investors to crypto, especially coming through the Robinhood platform, et cetera, may not have been attracted to the technology or to the sound money arguments. And that's why this is essentially a bit of a wake-up call for those, because I think when you look at where the selling's taken place, it's not from original holders of Bitcoin, but it's a lot of the new accounts.
Mm-hmm. Are you referring to the institutions then? And we heard this from another guest last week, that they're not really true believers. They were looking to partake in sort of this momentum, but they aren't necessarily believers in the back-end technology. Is that what you're referring to, Tom?
Yeah, and institution casts a really wide net, because there's family offices and there's hedge funds and CTAs and there's machines, especially now that there's liquid futures. I think a lot of institutional money does trade momentum. They've got stocks, and they also arbitrage liquidity. So I think if I was a machine, what I would have taken advantage of is the amount of leverage there was in the retail accounts, and the amount of either volatility you need to create or downside pressure to actually create liquidation. So, I mean, I think machines were playing it on the short side, on the institutional side. A lot of them covered, and I think that's why crypto is levitating this week.
Tom, how do you think cryptos, and I'm lumping Bitcoin in there. I know that there's a lot of diversity within crypto. How do you think cryptos perform in a down market? And you know the kind I'm talking about, when there's not a lot of day trading going on, individuals are out of the game, stocks are unpopular, people turn to things like real estate. I mean, does all of crypto get liquidated under a scenario like that and revalued? What should people prepare for?
John, absolutely. On a risk-off market, just like March 2020, crypto doesn't survive that, because liquidity is being withdrawn and people need to raise cash, and they might have margin calls in their fiat side. But that doesn't make crypto unattractive. It's the same reason people say stocks never underperform bonds over a 20-year period. You have to wait 20 years for stocks to beat bonds. In crypto, in Bitcoin, you never really had to own Bitcoin more than 24 months to actually never lose money. So I think Bitcoin is hyper volatile. That's the nature of it, but that's what creates the reward for people. And again, even though Bitcoin is in the penalty box now, I still think it can exit the year over 100,000.
Oh, there you go. Exit. I have seen Tom Lee say that he thinks Bitcoin is going to close out 2021 at 100,000. Actually, I'll put the little video in this in my card here in the information tab where Tom does say that. Actually, I think it was the end of 2020 or early 2021 in January that Tom Lee talked about Bitcoin being at 100K at the end of 2021. But lots of very thoughtful analysis from Tom. I really appreciate that. And he was really spot on. In case you don't know, I mean, I've been following Tom for a while. You know, I think I think I picked up Tom maybe in 2018. I was started investing fairly heavily in the markets in 2017 after I exited a property development here in Los Angeles. But basically, I was very inspired by his bullish comments about 2019, and he was spot on. After, you know, during the pandemic, he was actually really spot on with stocks in the S&P 500 in terms of where it was going to go, you know, in April, and then where it was going to go in the guidance for August, and then where it was going to go in his guidance towards the end of the year. So he's been really spot on with the way that he you know, his analysis and how he understands institutional money and the way it affects the market. So it's definitely exciting. I got something else. I also did a little research, and I found the newest clip from Ray Dalio, who has been very all over the map with his take on Bitcoin. And some of it's really, really funny. And then also, you know, how he thinks it's going to be banned. And then literally within today, actually, he talks about Bitcoin and its attractiveness and why it's attractive. So I want to share that with you real quick too. Okay, here we go. Here it is.
I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, you know, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk. So, yes, that's connected. The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond. And then the more that happens, then it goes into Bitcoin and it doesn't go into credit, and then they lose control of it. So yeah, that's a risk.
So there you go. There's Ray Dalio saying he would rather have Bitcoin than a bond. So he's definitely changing his tune a little bit. So hey, everybody, if you liked this take on, Tom Lee does not talk that much about crypto and Bitcoin. If you like this, if you want to find more, if you want me to find more clips on what's happening with institutional money and institutions going into Bitcoin, let me know. Go ahead and put a comment below and tell me that you'd like to see it, or maybe a certain coin, if like, you know, what institutions are going after, what coins. If you want to know about a certain coin, put that in the comments below. If you like this, if you enjoyed, you know, the value on this, give me a like, and then also subscribe. It's 100% free to subscribe, 100% free to hit the like button if you like this content, everybody. I do quite a bit more content, you know, on stocks. I got, you know, quite a bit more of a comfort zone, like I said, with respect to growth technology. I invested in Apple basically before the first iPhone came out in June of 2007. I got a 33x return on my Apple shares, 10x return on my Amazon shares, and then an 80x return on my Netflix, everybody. I'm going to put some links below if you want to check it out. I got a blueprint I came out with recently where I talk about investing, generating income online, and credit. At the very end, I got a guide. It's a 15-page guide. All the groups in the U.S. that give you a credit score, plus all the groups that give you a free FICO. If you're actually going to be going and getting credit, which is pretty much almost everybody in the United States, you need to know what your FICO score is. 90% of all lenders use their FICO when making lending decisions, and my guide actually has all the places that you can go and get your three bureau FICOs from for free. So they're going to either use a bureau that you don't know which one they're using, or they're going to use the medium of all three. So that's why you have to know what all three are. So that way you know what the middle score is, or you know what each one is, when you go and you try to go get credit. So that guide is going to be in a link below if you want to check it out. My first job out of college was Merrill Lynch. I did a lot of investment banking work and other investment work here in Los Angeles. So I got a deep background in it. I am not a financial advisor. I'm not your financial advisor. This is for entertainment and for education. Yeah, I've been an investor for a long time, and that guide is going to be in a link below if you want to check it out. Okay, thanks a lot. Have a great week.